Hi traders, how have you been? Well, in this video, I'm going to quickly share my take on how to protect yourself from false breakouts. Let me first walk you through how to figure out a breakout and how do we know that we are stuck. So let me draw two examples. See, breakouts essentially are of two types. One which is breaking out on the upside out of a resistance, which is a positive breakout, and there are breakouts of the negative nature where the market essentially breaks down below a particular support. Okay, ideally a breakout bar is generally a long one with a lot of volumes, a positive candle over here, and in this case it will be a red candle with the market falling down, closing below the support. Trust me, when you listen to anyone at this juncture, everyone would be extremely bullish on this stock or the index, and they would definitely give you much higher targets, which is fine, which is the nature of breakouts. Similarly, at this juncture, everyone sentiment wise will be extremely bearish, and targets would come up for this stock much lower than the current market price. So everyone will be bearish at this state. Breakouts are very common, amateurish, easy to trade, and that's why they are prone to failures. They lead to traps, the bull trap and the bear traps. If we find ourselves stuck in such kind of a trap, at what point of price do we realize this is it? Pull the plug, and get out of the trade. Well, I have a simple rule which I'm going to share with you in this video. So this is the breakout bar, right? So let's call it the breakout bar, and let's name it BB, the breakout bar. If this guy is the BB, then we would keep an eye on the bar or the candlestick before the breakout bar, and let's name it BB minus 1, which is this guy. And in this case, the BB minus 1 will be this guy over here. So ideally, if this positive breakout has to sustain, then this low should not be breached. And if this negative breakdown has to sustain, then this positive, this high of this BB minus 1 should not be breached. That's how it is. If you figure out that within the next 2 to 3 bars, max, let's say 5 bars, if this low is broken, and in this case, if this high is breached, then this is a trap, then this is a breakout failure, and the markets will turn around. And high chance, very, very high chance, you'll not get to see this low or get to see this high anytime soon. So let me walk you through some examples and see whether we understand this concept clear or not. Here we are in the daily chart of Nifty. I'm using the Iris Plus software over here, and let's see where we are right now. We can clearly see that 11,700 plays as a very important resistance for the market. So if we have a breakout above 11,700 on that particular candlestick, you will keep a very close watch on the previous bar. Let me show you some examples before let's look at here, this one. So this is a breakout bar. This is BB minus 1. This low should not be breached within the next 2 to 3 days. It gets broken, a little bit of bounce back. This high is not coming anytime soon. There you go. This is a breakout failure. This is the breakout bar breaking above these resistances. This is BB minus 1. This low should not be touched within the next 2-3 bars, or a little more than that. So over here on the third day, this high is not coming anytime soon. We've got a follow through correction on the market. Similarly, this can happen on the downside breakdowns also. So we have supports breaking down. BB minus 1's high should not be broken. It happens over here, and we have a reversal. This is a beautiful breakout success, a successful breakout where we have a breakout. This is BB minus 1 within the next 3, 4, 5 days. The market just runs away. It never comes close to BB minus 1. There you go. This is a successful breakout. As we, just go back further, this is another successful breakout. This was a beautiful trending market, and that's why these breakouts work really well. Look at this one. This I remember very well. This is 2016 low. This was the previous low for the Nifty. Broke down, closed below it. Everyone turns bearish. Market can fall. We don't know. This is the BB minus 1 high. It should not be tested within the next 1 to 5 bars, 3 bars. So there you go, the very next bar, it's a reversal. Let me just show you some examples with copper also. I'm using the Iris Plus software where I have access to NSE cash futures as well as the MCX data. So there you go, over here just a few weeks back we had a breakout on copper chart, daily chart again. The BB-1 low is a little steep on the downside. So look at this one, this makes sense, right? Resistance, support, it gets breached within the next 2-3 days. So this kind of logical few what do I say, alterations we need to do. But even if this gets breached, there you go, by the 5th day, this is a breakout failure. This looks like a breakout failure as well. Copper chart, this is an interesting one. Breakout, BB-1 low, breached. This was a spike. It never came close to closing above this high. Market comes further down. Like this, you'll find many breakouts like this one, breaking out to a new high, BB-1 low. This took a lot time to get tested, around more than I think 9-10 bars. So ideally, if it comes within the next 3 to 5 bars, that's the best case scenario. But as I see in this example, we have a case where BB-1 low got tested after more than 5 bars. USD INR, well, wait, over here, nice. We've got a breakout, BB-1 low, breached, we've got a breakout failure. So remember one thing, guys, that whenever you see a breakout, approach it with a little pinch of salt. This is your breakout bar. Look at the breakout bar -1. Keep the low as a stop loss for a long trade, or the high as a stop loss for your short trade. So if the market is breaking down to a new low, everyone is bearish. This is the breakout bar -1. Keep the high as your safeguard point, or where you will exit if you have gone short down here. So use this rule, guys, and let me know your thoughts about it. If recently you've done any breakout trades which backfired, use this rule just to check whether you could have made some relatively lesser loss on that trade or not. Remember one thing, that breakouts are easy, and that's why they are prone to such traps. I personally do not trade breakouts anymore. But in a running market on the upside, or a very strong bearish market on the downside, these breakouts work extremely well. So there you go. Please feel free to share your feedback, suggestions, and like I always say, trade well, trade wise.